Good morning everyone, Sage here again. You're watching Kalkine TV live from the Sydney studio, and this is the Buzzing Trends show. In this show, every day we bring you the special topics for you to discuss and the interesting aspects around it. In today's show, we're going to discuss the Australian travel and tourism shares and their recent performance. So let's get started. Let us look at some travel and tourism stocks performing well over the past 12 months despite the COVID-19 pandemic, and also look at some companies that are struggling. Well, the ASX travel shares arguably copped the most significant blow from the COVID-19 pandemic, and every country suddenly found itself fighting an invisible enemy. Countries' rapid response to control the spread of the virus was to close the borders. Australia, as a federation, saw its constituent states shut their borders to each other. That meant bad news for the travel industry. So not only did the travel industry find itself with no international revenue, domestic sales dried up as well. But this catastrophe also meant few travel businesses were in for a spectacular recovery out of the crisis over the 2021 financial year. The travel subsector has significantly outperformed both the consumer discretionary and broader S&P ASX 200 index by more than 90% during the past year. Let's take a look at some of the latest developments in the travel companies, starting with Qantas. Qantas is looking at a sustained rebound in domestic travel demand and the performance of its freight and loyalty divisions. This rebound will drive the Qantas Group's recovery from the impacts of COVID-19. And as per the current trading conditions, Qantas is forecasting to be statutory free cash flow positive for the second half of financial year 21. The temporary tightening of some border restrictions and a negligible effect on consumer confidence. The confidence in domestic travel is proving more resilient compared with earlier in the pandemic, and leisure demand is growing strongly, with deferred international holidays converting into multiple domestic trips. Qantas and Jetstar have now announced a total of 38 new routes since July last year to keep up with the increase in domestic leisure travel demand. And the knight in shining armour for Qantas is its freight operations, continuing to serve as a natural hedge for the downturn in international passenger travel and the cargo capacity that it usually brings. So Qantas freight operations are expected to exceed the revenue it achieved in the first half of financial year 21. Another saving grace for Qantas is the loyalty division, which continues to perform well with solid revenue from partners and high engagement from their members. The second half earnings are expected to be higher than the first half of financial year 21. Let's now take a look at some developments on Sealink Travel Group. Transport and tour provider Sealink enjoyed several boosts during the 2021 financial year. According to Guidera, Sealink has benefited from many factors, including renewing its vital bus contracts in Western Australia, South Australia and Singapore, which the company acquired as part of the Transit Systems acquisition in late 2019. At the same time, its domestic tourism assets and government-backed maritime routes have seen a surge in demand as Australians, have been forced to holiday at home. Let us now take a look at the fresh opportunities for Corporate Travel Management Limited. The second phase out of the pandemic will provide corporate travel management with the most significant opportunity to demonstrate its recovery potential. And since the third quarter of the calendar year 20, Corporate Travel Management's share price solely has kept pace with the market, and Corporate Travel Management raised capital. Although this was to fund their T&T acquisition, the company even had enough money to acquire US player Travel and Transport Inc. last year. Corporate Travel is well placed to take advantage of the significant growth in the US airline passenger numbers month on month as a vaccinated US economy continues to reopen. And now let's take a small break, but please stay tuned as I'll be back with more travel shares.
Hi, this is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Hello viewers, welcome back. You're watching Kalkine TV. This is Sage and we're bringing you the Buzzing Trends show. Before the break we were discussing about the travel shares such as Qantas and corporate travel. Well, just like corporate travel, Allianz brought up valuable assets last year at a pandemic discount. In this disarrayed sector right now, Corporate Travel Management Limited provides a fresh opportunity as it is in good financial health. Now let's take a hawk-eye look at Allianz Aviation Services Limited. Last year, Allianz took advantage of the slumping global travel, announced its plans to acquire 30 Embraer E190 aircraft, lifting the number of planes in its fleet to 66. And Allianz Aviation Services Limited wet leases aircraft to big rivals like Qantas Airways Limited and Virgin Australia. Wet leases are agreements between two airlines. The lessor agrees to provide an aircraft, crew maintenance and insurance to the lessee in return for payment on the number of hours an aircraft is operated. It is irrespective of how many passengers are on the plane or the price they paid for the seat. So moving on to the next company in the travel and tourism space, Reef Casino Trust is an owner and lessor of the Reef Hotel Casino, which engages in the investment and management of a hotel. Its operations include booking rooms, live bands, shows, gaming, events, wildlife dome and sports arena. And recently the company removed an interim dividend from Reef Casino Trust's shares. Another stock to look out for is Experience Co Limited, which was formerly known as Skydive, the Beach Group Limited. The company is a provider of adventure tourism and leisure experiences in key tourist destinations in Australia and New Zealand. It includes tandem skydiving, Great Barrier Reef snorkelling, helicopter and diving tours, and experiences via hot air ballooning. Let's move on to the next one. The Star Entertainment Group Limited engages in managing integrated resorts with gaming, entertainment and hospitality services. It operates through the following segments: Sydney, Gold Coast and Brisbane. Star Entertainment's businesses are based in 3 of Australia's East Coast cities, which are typically a blessing for the hotel and casino operator. But due to the current lockdown situation, it is facing issues. Still, the company has decided to keep paying its Queensland-based staff, even in the lockdown phase. And let's take a look at the next news. The recent announcement by Qantas on slashing commissions for travel agents meant terrible news for Hello World Travel Limited. The company operates as a travel distribution company in Australia, New Zealand and internationally. The company provides international and domestic travel products and services and operates a franchise network of travel agents. It operates retail travel brands including Hello World Travel, the Travel Professionals and a network of retail outlets such as Hello World Travel Associate, Hello World Business Travel and Magellan Travel, Mobile Travel Agent, Travel Group and the Travel Brokers. Following the news from Qantas on slashing commission for travel agents, it affected Webjet Limited too as the share price dipped. The company has not released any news in recent times. However, the company may be feeling the pressure as COVID-19 continues to rear its head. And right now, the Webjet share price is sitting at around $4.97. And this time last week, it was about $5.21. And that represents a 4.61% fall in just 5 trading days. And one possible reason the market has gone cold on Webjet is the resurgence of the coronavirus cases in Australia. And lastly, Flight Centre Travel Group revealed its global retention program. The company will give 1.9 million company shares to sales and support staff who continue their careers with the group during its expected recovery phase, but will exclude board members and senior executives. And last week, Flight Centre shares climbed from $14.55, trading from $16.30. And this was a special report on the latest top-performing and struggling travel and tourism stocks on the ASX. Please stay tuned for more updates on the travel stocks and what's in store for them, especially in these challenging times. And this is Sage signing off for now.